It's time for Smart Charts with Abigail Doolittle, where we look at timely topics through the charts. And Abigail, you're looking at momentum.
You're right about that, Joe. This week's big topic, the rotation. With me is Ari Wald of Oppenheimer and Company. Thanks so much for joining, Ari. And the topic this week, and we were just talking about it, so many people are talking about it, you have to almost wonder if it's overplayed at this point, what will come of it. Momentum versus value. And you have a great chart here, and you have a slightly different take than what I've been hearing from other people.
Yeah, it's rotation week. What does it all mean? So what I have here, and we the one line we think it's bullish. What we have here is the Dow Jones High Momentum Index and the Dow Jones Low Momentum Index. And momentum's had a tough week, high momentum on a relative basis. But really in absolute terms, really just pausing in an uptrend. What it's been more about is this big surge in low momentum stocks, the stocks that haven't participated. We think this is bullish. This is what you want to see if internal breadth is going to finally start to broaden. If you look back historically, the times when low momentum outperforms, 2003, 2009, 2016, usually big market turning points to the upside. We think this is the type of action you want to see if the market as a whole is finally going to sustain that breakout. So
that's a very compelling case. So to summarize, you would then in fact be buying both high momentum and low momentum, especially because low momentum is now finally catching up and it suggests the market overall is going to go higher. True?
I think you don't want to short low momentum, that's for sure.
Okay.
In general, I think you want to kind of find a little bit of a common ground here. Buying more cyclical high momentum is our preference.
Okay, so in the low momentum you'll just use as a signal for that buying action.
That's right.
Another signal for the buying action, we have a chart here showing that you are saying market conditions are cyclically oversold going all the way back to 2009.
That's right. I think the market is set up to position to the upside as well. Here's the S&P 500's 52-week rate of change. Over the last year, S&P 500 is only up 2%, more or less oscillating around that 0% level throughout 2019. After such a period of little market progress, we think forward returns are going to be better. We see a lot of similarities to the reset in 2016, the reset in 2011 as well. 2018 was a small bear market. 2019 has been the base building. I think we're ready to start moving higher again. Okay,
so I already told you I have a question for you on this, which is from a pure technical standpoint. Does it concern you at all that we have lower highs in terms of the rate of change here over 52 weeks and more equidistant on the bottom? Do you think that that signals that this entire range could, in fact, instead of breaking to the upside, go downside?
Great point, Abigail. I think what you're seeing here is we've had these equity cycles in the same economic cycle since 2009. And I think that is suggesting that as we lose momentum, the economic cycle is indeed maturing. We had the inversion in the yield curve. I just think, and the inversion in the yield curve, awful timing signal. I think you get one final run up maybe over the coming year until you get peak economy.
And so you definitely recommend playing that. You were talking about high momentum cyclicals. You like the semiconductors, which I think is a pretty bold call only because they are certainly vulnerable, to say the least, to trade headlines and factors out of the control of a lot of investors.
They've been trading on, off with those trade headlines, but through all that, stair-stepping higher, making higher lows, higher highs. Here's the semiconductor stocks also pushing above resistance from 2018, a year-long breakout. In fact, if you were to extend that line back, that also goes back to the semis year 2000 peak. This is a 19-year or attempted 19-year breakout in trend. We see the rising 200-day moving average. I think that gives it some credence. I think you want to own semis here on that for that breakout.